A new car can make you feel successful in one moment. You get the keys. You smell the interior. You picture yourself driving it everywhere. But then the payment starts, month after month. And before you realize it, the car is not taking you toward freedom. It is taking money away from your savings, investments, and future. The car payment trap is not about owning a car. It is about paying too much for a car that keeps you financially stuck. Dealerships know most people do not focus on the full price. They focus on one number, the monthly payment. And that is exactly where the trap begins. Because a payment may look affordable by itself, but the real cost of a car is much bigger. There is insurance, gas, maintenance, repairs, registration, interest, and the value your car loses every year. A low monthly payment can hide a very expensive decision. Imagine someone says, "Good news, we got your payment down to just $600 a month." That sounds great, but they may have simply stretched your loan over more years. Instead of paying less for the car, you are paying for it longer. And the longer you owe money on a car, the more interest you may pay. The lower payment feels good today, but it can cost you much more tomorrow. That is why you should never judge a car only by its monthly payment. A long loan can make an expensive car look affordable, but it creates a dangerous problem. Your car gets older every month. Its value goes down, but your loan can stay high for years. You may still be paying for that car long after the excitement is gone. By then, you may need repairs. You may want a different car, or your situation may change, but you are still locked into the payment. That is how a car becomes a financial prison. The moment you drive a new car away, it usually begins losing value. That does not mean buying a new car is always wrong, but it does mean you need to understand the risk. You could owe more money than the car is worth. This is called being underwater. And when you are underwater, selling the car becomes difficult. Trading it in becomes expensive, and escaping the payment becomes much harder. You are not just driving the car. You are carrying the debt behind it. Being underwater can lead to one of the worst car finance mistakes: rolling old debt into a new loan. You trade in your current car, but you still owe thousands more than it is worth. Instead of paying that difference with cash, it gets added to the next loan. Now your next car is more expensive before you even drive it. That is how people end up paying for two cars, even though they only own one. This is why people can feel trapped in endless car payments. They buy a car. They owe too much. They trade it in early. They carry the old debt into the next loan. Then they repeat the same cycle. The payment never disappears. It simply moves to another car. And every time this happens, it becomes harder to build savings or invest for your future. The car payment trap is not always one bad decision. Sometimes it is a chain of small decisions that keeps growing. Now think about the payment itself. Let's say your car payment is $700 a month. That is not the total cost. Add insurance, add fuel, add maintenance, add unexpected repairs, add registration and parking. Suddenly, your car may be taking a huge part of your monthly income. And if that payment stops you from saving, paying debt, or investing, then the car is not helping your life. It is controlling it. Every dollar you send to an expensive car payment is a dollar that cannot work somewhere else. It cannot grow in investments. It cannot build your emergency fund. It cannot help you pay off high-interest debt. It cannot give you the freedom to leave a bad job. A car can be useful. It can help you work, travel, and take care of your family. But the wrong car payment can steal your future quietly, 1 month at a time. The biggest question is not, can I make this payment? The better question is, can I comfortably afford the full cost of this car while still saving and investing? Because almost anyone can force a payment into their budget. They can cut savings. They can use credit cards for emergencies. They can skip investing. They can tell themselves things will improve later. But financial strength comes from having room in your budget, not from barely surviving every month. Before shopping for a car, know your real budget. Write down your monthly income. Then list your important expenses: housing, food, utilities, debt payments, savings, investing, and emergency money. Only after that should you decide how much transportation can realistically cost you. Do not start at the dealership. Start with your own numbers. A car should fit into your financial plan. Your financial plan should not have to suffer because of a car. The next smart move is to shop for financing before you shop for the car. Do not assume the first loan offer is the best one. Compare rates. Compare loan terms. Look at the total amount you will repay. and understand every fee before signing. A small difference in interest can make a big difference over several years. The goal is not just to get approved. The goal is to get financing that does not punish your future. A strong down payment can protect you from the trap. The more money you put down, the less you need to borrow. That can lower your payment, reduce your interest cost, and make it less likely that you will owe more than the car is worth. But do not empty every dollar you have just to buy a car. Keep emergency savings too. The goal is balance. Buy a car you can afford without creating a new financial emergency. Sometimes the smartest car is not the newest car, and it is not the most impressive car. It is the reliable car that does its job without destroying your budget. A car does not need to impress strangers. It needs to get you where you need to go. Choose reliability. Choose lower ownership costs. Choose a payment that gives you breathing room. Because financial freedom is much more valuable than looking successful in a parking lot. One of the best ways to escape the car payment trap is to keep a reliable car longer. Maintain it. Change the oil. Fix small problems before they become big problems. Take care of the tires. Follow the maintenance schedule. Every extra year you can drive a paid-off car can change your financial life. Because once the payment ends, you can send that same money towards savings, debt payoff, or investing. That is when your money starts working for you. Do not trade in your car too early just because you are bored with it. Do not upgrade because someone else bought something newer. And do not carry old debt into a new loan unless you fully understand the cost. The excitement of a new car can last a few weeks, but the payment can last years. Before upgrading, ask yourself this: would I still want this car if I had to pay the full cost in cash? That question can save you from a lot of expensive decisions. A car should support your financial life, not become your biggest financial problem. Avoid deals that sound too good to be true. Avoid loans you do not understand. Avoid buying more car just because the lender says you qualify. Approval is not affordability. A bank may approve a payment that makes you stressed every month. Only you know what your future goals need. Protect them. Do not let a car dealer, lender, or social media trend decide your financial life. Imagine what happens when you remove a big car payment from your life. Suddenly, you have hundreds of dollars more each month. That money can build your emergency fund. It can reduce debt. It can go into investments. It can give you options. This is why a paid-off car is powerful. It is not just transportation. It is financial breathing room. And breathing room gives you the ability to make smarter decisions. The car payment trap is not impossible to escape. Start with honesty. Know what you owe. Know what your car is worth. Know how much the payment is costing you every month. Then make a plan. Keep the car longer. Pay extra when possible. Avoid adding more debt. And make your next vehicle decision based on your future, not your ego. Your car should be a tool, not a burden. The goal is not to never buy a car. The goal is to own your car without letting it own you. A smart car decision can protect your savings. A bad car payment can delay your goals for years. So before you sign anything, look beyond the monthly payment. Look at the full cost. Look at the long-term impact. And choose the car that helps you build freedom, not the car that keeps you broke.